Hello everyone, welcome to the Ichimoku charts.com daily analysis for the Aussie dollar US dollar FX for Tuesday, June 11th, 2013. Well, a continuation of the trend to the downside today. The candle we're analysing is this second last candle on the chart. The last candle here, which is very important at the moment, hasn't finalised trading yet, but some very important price action that's happening at the moment, and we'll look at that in a minute. But analysing this second last candle that has completed trading, a small black bodied candle, the trend is still down, a candle with a lower high and a lower low, continuing that trend that was established some time ago. And the black body denotes the sellers making net bearish progress, so the sellers finding some momentum, where the momentum swung to the buyers for the previous day's trading in net terms. But if we look at the long shadow on the bottom of this candle as the market tested down below the 93.86 important level of prior support, we did see price rejection from below there. And it does suggest that that will be a strong barrier to this market trading lower. If we can see a bearish close down below the 93.86 level, we could quickly see the market testing down to 92.21. But at the moment, this current candle, as it's developing, it looks as though there is a change of trend at the moment, and we do have a candle with a higher high and a higher low and a white-bodied candle. For this trading period that has closed, we saw the sellers fail to close with control of this market, and the buyers have closed with control by closing up above the midpoint level, so it doesn't give us a lot of confidence in the potential for the trend to continue to the downside, and it seems that the support around the 93.86 level has had its effect, and we've seen the buyers come back in solidly to take control. The large shadow on the bottom of this candle represents the sellers losing commitment down around this level and the buyers coming in. Now, in terms of this market rallying here, we do have this zone that extends down below the 95.36 level as previous support for this market, and we see the price rejection here in a zone that extended down to the 93.86 level. So the area up to 95.36 could act as resistance, and that will be a potentially limiting factor to this current candle that's developing, changing the trend. So 95.36 will or has potential to act as very, very solid support resistance, as does the 95.81 level just above there. We also have the Tenkan-sen trading between those two levels, strengthening the area in a zone around that level there as potential resistance for this market. Now, in terms of the Fibonacci extension, and here today we saw the market test down below the 261.8% level and be rejected from there. Previously we saw the market trading through all of the important levels through the 161.8%, and for the previous day's trading testing exactly to the 261.8%, or opening up there, testing just below and closing above in a bullish manner, suggesting that we had potential for a change of trend. Today, with the strong price rejection from below there, has set the market up for a change of trend, and we've seen that happen today. A candle that's made a higher high and a higher low, and does suggest potential for the market to trade higher. And also with the Fibonacci retracement, we're examining the relationship of this first time frame downtrend that the market has been into the previous time the market was trending up, and here today we saw rejection from the 161.8% level. We tested to there and we rejected from there, with the buyers coming in for the previous day's trading. Today the buyers have maintained control, and we've seen the sellers losing commitment down below the 93.98 level. Change of trend today, higher high and a higher low, suggests that the market has potential to trade up to around those higher levels that we've already discussed. Now, in terms of Ichimoku, we have a bearish market in all three timeframes. The market is trading down below the cloud, so the market is bearish in the long-term time frame, and we're trading down below the Kijun-sen, the pink line, and the Tenkan-sen, the green line, so we're bearish in the medium term and the fast term time frames. And the Chitka span here is below the corresponding price action and below the cloud, so it's confirming the bearishness that we're seeing in all three time frames. Just ignoring this flat bit, and we can't take that into consideration at the moment because the final candle hasn't finished trading, but these flat bits on the both of the Ichimoku indicators we have to disregard. But looking at the angle of the Kijun-sen here prior to this current candle that's developing, it has been pointing down quite sharply, has had as has the Tenkan-sen, and it reflects the downside momentum that we've seen in this market. So with a market that has found some very solid downside momentum for a long period of time, it wouldn't surprise to see it attempt to rally, and for the sellers to take a bit of a break, and the buyers to come back into this market in a moderate way. The only problem for the buyers here is, however, that we do have this strong resistance overhead, standing up to 95.81, and we have the Tenkan-sen trading in between those two levels, strengthening the resistance there. And then if the market does trade up through the 95.81 level, 96.62 is very, very solid resistance as well. So overall, a bearish market in all three time frames. The buyers are coming in the first time frame. A likelihood that the market will rally, but should find solid resistance close by.